Welcome to this online conference on the future of trade finance, opportunities for Hong Kong, Asia, and the world, co-hosted by the Asia Global Institute of the University of Hong Kong and the International Chamber of Commerce in Paris. My name is Alejandro Reyes. I'm Director of Knowledge Dissemination at the Asia Global Institute. Before we begin, let me recognize with thanks organizations that have helped put this conference together. The Hong Kong Monetary Authority and its Hong Kong Academy of Finance, HSBC working across teams in both Hong Kong and London, the Hong Kong Economic and Trade Office, HKETO in Bangkok, which is helping to provide simultaneous interpretation service from English to Thai for this event. And we thank two organizations which have helped spread the word about this event through their networks, including the Hong Kong General Chamber of Commerce and the United Nations SCAP in Bangkok. So thank you very much to them. We are delighted today to host this gathering of experts to discuss and drive action on an issue crucial to Asia's growth and development. Solving the trade finance challenge for small and medium-sized enterprises, SMEs, is an absolute necessity for Asia's and the world's recovery from the pandemic and the future of sustainable, inclusive growth. We have today a distinguished lineup to take us through the various issues and solutions. We will first hear from Dr. Victor Fung, the co-chair of the Asia Global Institute Advisory Board, group chairman of the Fung Group, and co-chair of the task force behind the initiative to set out a vision for a new trade finance ecosystem. Then we will have Mr. Eddie Yu, Chief Executive of the Hong Kong Monetary Authority. He'll share his views on how FinTech and the Hong Kong ecosystem are co-creating solutions to the trade finance challenge. Afterwards, Mr. Yu and Dr. Fung will have a brief conversation. Then Alessio Botta, a senior partner with McKinsey & Company in Milan and a leader in McKinsey's global banking practice, will open the panel discussion by sharing key insights from the Trade Finance Research Report, Reconceiving the Global Trade Finance Ecosystem, published by the International Chamber of Commerce, the Fung Business Intelligence, and McKinsey & Company. This will lead to a panel discussion on aspects of that vision featuring colleagues from the ICC, the International Chamber of Commerce, HSBC, the Hong Kong Monetary Authority, and McKinsey. To close the afternoon, we will hear from Mr. John Denton, the Secretary General of the ICC, speaking more broadly about the future of global trade. So throughout this webinar, please feel free to use the Q&A box for any comments or questions that you may have. Now, let me turn the floor over to Dr. Victor Fung. Thank you.
Thank you very much, Al. Good morning, good evening. Welcome, everybody. I'd like to also personally extend my warm welcome from Hong Kong to all of you to join this roundtable, the future of trade finance opportunities for Hong Kong. This is really a great occasion for us to get together and talk about a topic, I think, crucial to the post-pandemic economic recovery and also the future development of the world's economy. You know, in the first half of 2020, at the beginning of the pandemic, you know, the world experienced really serious disruptions with the global supply chains. And really, this was really felt by producers, by consumers, by intermediaries all around the world. However, I think the hardest hit has been the SME, small and medium enterprises sector. And in that regard, the thing that they actually missed the most was access to trade finance. Now, if you look at the problem of trade finance, the issue of trade finance, this has actually been with us for a long time. Looking back to the financial crisis of 2008, 2009, I think we actually faced a crisis with trade finance at that time. And then the so-called trade finance gap has persisted and really has been really running at about $1.5 trillion throughout. And in fact, to this day, unfortunately, I have to report that during the pandemic, it has actually increased. And the latest estimates probably put it at $1.7 trillion as this persistent trade finance gap. Now, in 2020, in response to this whole crisis situation, the advisory group on trade finance, what we call the ATF, was formed under the auspices of the International Chamber of Commerce. We wanted to address the systemic problem and especially look at how this would help, really relieve the plight of the SMEs and actually channel more liquidity and more finance to them. Hence, the report, Reconceiving the Global Trade Finance Ecosystem, was produced. Now, in putting this report together, my co-chair and I, and Marcus Wallenberg and I, are very fortunate to be supported by a wonderful group of advisory board members in the ATF, and I'd like to thank them here for their support. But also, we were very fortunate to have the support of McKinsey and Fung Business Intelligence as our knowledge partners. And in the process, we actually had very good access to over 100 experts on trade finance from around the world. And of course, we interviewed many SMEs themselves to tell us a little more color on what really is the challenge for them. So we thank you all for this contribution. Now, you will hear about the substance of this report later in this roundtable, but I really want to make sure I make one point and across, and which in my mind is at the heart of our recommendations. And this point is this: I think today we have the wherewithal to really technically address this issue. First of all, the problem is not liquidity. I would actually ask all our bankers in our audience. I think the banks today are awash with liquidity. The question is, how do we channel this into trade finance, and especially trade finance in SMEs? I think we now can use a lot of technology, blockchains, etc., to enable many good solutions in solving this very important problem. And I myself have experienced a lot of good systems. The real issue in my mind is really all these are independent efforts in digital islands, if you were, that do very well by themselves, but are not talking to each other and interconnected. So if we think about it on a systemic global basis, the real need is thinking about how to actually connect all these together and really connect these silos and this fragmentation so that we can operate globally as a system. Hence, I think the idea of thinking about an interoperability layer is absolutely essential. Now, first of all, this is not about creating an overarching technology platform that includes everybody in the world. It is really in providing a framework and common protocols for systems to connect and integrate. The intended outcome, of course, is that we'll be able to actually hook the systems together on a holistic whole, and at the end of the day, channel finance and help to the sectors that need it the most, which is the SME sector. This report was actually launched 2 months ago at the Bloomberg New Economy Forum. And we are very fortunate to be able to work closely with the Hong Kong Monetary Authority, HKMA, and to work on various aspects. And I'd like to thank you again, all my friends at HKMA, for your support. And I think we really wanted to create this roundtable to really bring home to Hong Kong regional and global audience the importance of this issue, and to also give the message that we in Hong Kong are really developing ourselves very rapidly into a center for this type of trade finance capability. So I would also, as Al mentioned earlier, really thank UNESCAP and Hong Kong ETO, the Economic and Trade Office, for really helping really put this whole webinar together. And then, in my mind, this is something that I hope we can start and then continue in a series of dialogues. So implementing the interoperability layer is a process which, in my mind, will happen over a number of years. And we're only at the starting gate. The key point is the journey has started. So, ladies and gentlemen, I think at this point, it is my great honor and pleasure to invite Eddie Yu, the CEO of the Hong Kong Monetary Authority, to give us his thoughts in his keynote speech. Eddie, the floor is yours.
Thank you very much, Victor. And good morning, good afternoon, everyone. First of all, let me thank Victor for inviting me to speak. And the HKM is very, very pleased to support today's event. It would have been nice to meet you all in person, but I'm also thankful that this event can go ahead as planned in a virtual format. Today's topic is the future of trade finance. And I believe that we all agree that in order to elevate global trade finance to the next level, the recurring pain points of the existing trade finance system has to be fixed. And the issues, for example, including a very paper-based system that is inefficient, prone to fraud and human error, these have been discussed many times. And so I believe by now, we all have a basic understanding of where the problems are. In fact, the various stakeholders, including the HKMA, we have been attempting to solve these pain points by using new technologies like what Victor mentioned, like blockchain. One example is back in 2018, the HKMA has already facilitated the launch of eTrade Connect, which is a blockchain-based platform that aims to digitize paper-based documents and automate the trade finance process. And this platform was subsequently connected to a similar platform built by the People's Bank of China to facilitate cross-boundary trade finance processes. In fact, similar platforms have already gone up around the world, but the trade finance gap continues to widen. According to the ADB, Asian Development Bank, about 10% of the global trade now suffers from the trade financing gap. And Victor earlier mentioned that in 2020, the value of the gap amounted to $1.7 trillion US. And compared with 2018, just 2 years ago, it actually marked a 15% increase and not reduction in the gap. And the SMEs are suffering in particular. You know, if you look at the rejected trade finance request, SMEs actually accounted for an alarming 40%. And these figures all tell us that global efforts are nowhere near enough. And we should all rethink why the gap is continuing to widen and how we can make our efforts more effective to bridge that gap. And the recent report that Victor earlier mentioned, which is published with the support of Fung Business Intelligence, it suggested a possible reason, which is the various digital trade finance platforms mostly work independently and they do not synergize with each other, resulting in the digital islands. And it is as if we are all putting our heads down and concentrating on doing our own work, developing our own platforms, forgetting that it is equally important for these platforms to communicate and work with each other. And it was suggested in the report that interoperation between the platforms could help to further modernize the global trade finance ecosystem and close this gap. And we cannot agree more with that conclusion. In fact, there's one project that the HKMA is building, which is called the Commercial Data Interchange, also known as the CDI. And it is precisely designed with enhancing interoperability in mind. By way of background, CDI aims to enhance the sharing of commercial data through a common platform. Currently, if you think about a bank, every time they want to connect to a data provider, it has to set up a new and separate connection, many bilateral connections. But with the CDI, each bank and each data provider, they will need only a single connection to a common CDI platform, which will be built by us. So as to allow the banks to quickly access the business data of corporates. And banks will also be able to conveniently and quickly set up connections with new data providers because CDI uses standardized APIs and data models, and it also adopts existing mainstream industry standard like the LEI, the legal entity identifier. These common standards are quite important if you want to solve the question of interoperability. I mentioned that CDI is designed with improving interoperability in mind. Because the platform can actually link up scattered digital islands and smoothen the data sharing process. It's got great potential to enhance the trade financing process and also improving the SMEs' access to financing in general. And let me show you how this can be achieved with the use of a story. Just imagine a Mr. Zhu who runs a small business in Hong Kong called Zhuge with the help of his wife and parents. Zhuge imports frozen chicken from Guangdong. I think many of you will know a place called Qingyuan, which is very famous for its chicken. And Mr. Zhu sells them to supermarkets all around Hong Kong. It's delicious and their service is good, so they've got a big group of loyal following very quickly. They want to expand their business and they went to a bank just a few years ago, wanting to apply for loans. And the bank asked them for financial statements that they have never produced, being a very small outfit. So the loan approval ended up taking almost 6 months, and the experience left Mr. Zhu extremely frustrated and upset, unfortunately. And he was left really scarred by the process. But last year, Mr. Zhu was ready to further expand his small outfit again because the business was good. And it was the time when the CDI was doing a pilot. So Mr. Zhu decided to just give the new technology a try. And this time, the banks, instead of asking for financial statements, balance sheets from Mr. Zhu, who cannot produce one, they now obtain alternative data from various data providers through CDI about Mr. Zhu and Zhuge. For example, from the integrated online shopping platforms, which is on the CDI, the banks can learn a lot about the amount of frozen chicken that Zhuge is supplying to different supermarkets, the value, the daily amount, and almost on a real-time basis. So with all these almost real-time sales data, the banks can now understand Zhuge's latest operating conditions much better without the need for complex financial statements, and they can actually make their credit decisions very speedily. And needless to say, before the data was used and shared, the bank has to get the prior consent from Zhuge. Data privacy is important. In the end, Mr. Zhu secured quite a substantial loan at a very nice interest rate, and he was very pleased with the hassle-free experience compared with a few years earlier. That's the change that I talk about. Now, what if I tell you that the story about Zhuge is actually a real one? Indeed, it actually happened during the technical exploration stage of the CDI when we were doing the pilot. And CDI has, in fact, in real life, has been helping the SMEs in Hong Kong just to take more control of their own digital footprint, like the sales data in the various online platforms, and use their own data to improve their own access to financial services. So basically, they use their own data to help themselves. And through this pilot, we've got the importers of frozen food, importers of sneakers and other consumables, manufacturers of phone accessories, and they have all enjoyed the benefits of CDI firsthand. And when we get more and more banks and data providers joining the CDI, we expect that an increasing number of SMEs will benefit from this platform. But for CDI to reach its full potential and successfully connect the digital islands that I talk about, active participation from banks, data providers, and also the customers themselves will be crucial. So if I can describe CDI, it's actually a team sport, and we all have a role to play as members of Team Hong Kong. And the HKMA, of course, is a very active member of Team Hong Kong. As a regulator, we will try to facilitate a conducive environment. And we are doing that by building the infrastructure, building the common platform, and also offering guidance to banks. And for banks, we urge you to embrace fintech and join the CDI platform. In fact, the other platforms as well. To data providers, we invite you to contribute meaningful data, such as logistics data and procurement data between buyers and suppliers, so as to enrich the types of data available. And we're also talking to the government to see whether certain government data, like companies registrar or even tax data, can be put onto the CDI. And for the SME owners, we encourage you to talk to your bank and understand more about how CDI can help you with your borrowing process. And together, we can take Hong Kong's data ecosystem to new heights. And ultimately, that will contribute to bridging the global trade financing gap as well. The benefits of a more digitally integrated trade finance system are plentiful, that much is certain. And the HKMA will strive to help bring about an enhanced system in collaboration with different stakeholders. And of course, we look forward to working with the ICC and also the Fung group in this regard, so that the needs of the underserved segments can be better catered for. Before I close, I would like to take this opportunity to offer you a glimpse of the HKMA's vision of digitalizing cross-border trade. For those of you who have been following our CBDC, central bank digital currency developments closely, you will know that we are working on a project called mBridge. It is basically a blockchain-based central bank digital currency payment corridor between jurisdictions so that cross-border payments can be done more efficiently. We have already developed a trial CBDC platform, which is now on pilot, and it has proven ability to speed up cross-border payments from multiple days to near real time. And we are also exploring the feasibility of connecting the 3 blockchain-based platforms that we have: the eTrade Connect, the CDI that I just talked about, and the mBridge, to strengthen the synergy between the 3 and further digitalize the whole cross-border trade process. First, eTrade Connect can provide the infrastructure for digitalizing trade finance, as well as support cross-boundary trade between Hong Kong and mainland, and subsequently spread that out to Asia as well. And second, CDI can link up the various digital islands to form a seamless data ecosystem that can help the banks to validate the credit standing of the SMEs asking for trade finance. And finally, mBridge, the payment corridor, can help expedite cross-border payments while reducing costs. And we believe that the combined power of the 3 infrastructure will pave the way for digitalizing cross-border trade in the trade corridor between Hong Kong, mainland China, and also other APAC regions. And I hope to share further updates with you in the not so distant future. I hope that our work can be in good progress. But in the meantime, I'll welcome your feedback and suggestions. I think I'll stop with that, Victor. And again, I'll thank you for the invitation.
Yeah, Eddie, thank you very much for that very inspiring set of remarks. I mean, I'm delighted to see how the HKMA is really playing a major role in this whole interoperability layer. Now, and really how you're actually putting everything together also to help the Jew gays of this world, in the real world. I think that's really delightful. Let me, we have a little time, so let me, shoot a few questions at you that maybe all of us in the audience will be thinking about. First is probably a more general one. In coming up with any form of new technology and adoption of digitalization, one of the things we are concerned most is really the adoption rate, right? And I know that it's very hard to really, for somebody or any institutions, even large institutions, to really quickly adopt those. So what is the progress that we're really making in the E-Trade Connect and also the CDI? And also I'd like to ask you, what does it take to really accelerate this? And do you also have in mind maybe some policy, stronger policy hand to help this process?
Well, Victor, I think you hit the nail right on the head. It's not as difficult to create new platforms or infrastructure technically, but to get the adoption rate up, to make sure that the business use is there, is the more challenging part. And we've encountered similar challenges for different infrastructure. For example, for the E-Trade Connect, it was introduced in 2018. It was actually quite early, a time when people are not as familiar with blockchain applications as now. And the inertia, the force of inertia is actually bigger than we thought. It takes quite a kind of push to get people to change their habits, to change their systems in order to get onto this new platform. So the take-up rate was actually slower than we would have wished. But we see two push factors there. One is the connection that we have with People's Bank of China, which is now on pilot. Once that link with the E-Trade Connect platform in the mainland China is in full operation, we believe that there will be requests from the other side, the counterparts, that, hey, can we use electronic means instead of the old means to process our trade operation? Second is the coming online of the other platforms that I talk about, including the CDI and also the mBridge. So with the CDI, when the banks are able to do the credit validation through data, that can actually combine with the E-Trade Connect so that they can offer the trade finance through two blockchain platforms in a kind of straight-through way. Of course, mBridge can help them with the payment. So I thought the linkage with the People's Bank of China and also the coming on stream of these two other platforms will help. But the CDI story is quite different. We are still doing the pilot, but the response from banks, data providers, and the users are actually a lot more enthusiastic because there's something for everyone through this platform. Economic incentive is important. If you want to change behavior, you've got to have something that incentivizes them to invest and change behavior. For the CDI, for example, the banks can reduce their risk through the use of data scoring, and also they can widen their client base. The data providers can make better use of their data to generate additional revenue. And the users can, like Zhuge, they can use their own data to obtain cheaper and easier loans from banks. So there's something for everyone, and we've actually got more requests from banks and data providers to join in. And we do hope that the adoption and the take-up rate of the CDI will be a lot smoother and faster than the other highways that we have built.
Yeah, no, I think that's a very, very good answer. I think in all these things, in my experience, there's always a push and a pull. On the one hand, you've got to develop the demand, and the other, you may need to give them some inducement, some push. And I hope that the adoption rate is like any normal S-curve. It may be slow in the uptake, and then once you reach a critical mass, we're off to the races. So yeah. I really keep my fingers crossed. We certainly think that will bring a new era to all of us traders. Let me go on to the next question that I'm sure many people would have in the back of their minds. And that's really talking generally about how Hong Kong may play a role in the region. Of course, here in Hong Kong, our first and foremost focus is cross-border trade in and out of the mainland. That's obviously our biggest trading partner, our linkages to the GBA, etc. However, I think it's increasingly important for us to also look south to our linkages to ASEAN, and frankly, through ASEAN, with the development of things like the RCEP to the rest of the Asia Pacific region. So what vision do you have, Eddie, about the role that Hong Kong can play in setting up a Hong Kong model of a digital trade and finance solution for Asia as a whole as an integrated trading region?
Well, definitely. And Victor, I think you're exactly right. what we are trying to create here is not really just mainland Hong Kong. It's a start. But if the pilot runs well, we do hope that it can be extended first to our neighbors in Asia, especially given that intra-regional, intra-Asian trade is actually on the rise. It's getting more important. So if we can get the trade finance process within Asia to be digitalized, to get more efficient, to have better access for everybody, I think that will be very useful. In fact, if you look at the Enbridge project that we talk about, our first attempt was actually done together with Thailand back 4 or 5 years ago through a project called Line Route Infinite. And then we evolved from there to invite also mainland China, UAE and BIS to come in. So we always have in mind that when we develop these multi-jurisdictional platform, we will want to involve both the mainland and also our trading partners in Asia. The same with eTrade Connect. The platform in Hong Kong is one thing, but it's important that you've got a link with the other end of your trade, in terms of your trade partner, counterparts. Mainland Hong Kong trade, no, mainland is Hong Kong's largest trading partner. We will start from there. But mainland is also the largest trading partner of many in Asia. And the same model can actually apply to others. And we will try to push that as well. So that's on our mind in terms of the development roadmap. After we got the pilot running smoothly, we hope that we can have, especially for Enbridge, we can have an open invitation to other Asian central banks who will be interested in joining it. And also in designing Enbridge, we have this in mind as well. It's really about how easy it is for others to join. So technically, Enbridge adopts a very open infrastructure. So whether you're using the blockchain or whether you're having the CBDC platform, or even when you're using your traditional RTGS payment platform, you can still plug into Enbridge and join the network without really having to worry too much about, hey, do we have the same typology and all that? It's very flexible. So we do have this plugging in mechanism in mind when we design this.
Oh, okay. That was a great answer, Eddie. Now I was wondering, we had such great support for this roundtable in Thailand, and we're actually doing translation. And now you explained it. Really, Thailand was our initial partner, one of our initial partners in the Enbridge. And I'd like to take this opportunity to say a very warm welcome to all our friends in Thailand that are listening in to this roundtable. Yeah. So I think that's really great. And I think also, if you step back and look at Hong Kong as a whole, and I just want to support what you were saying, our two major competitiveness is the fact that we really have one of the region and indeed the world's most advanced, financial centers. At the same time, we're also one of the, most important centers for global supply chains. And when you look at these two real comparative advantages for Hong Kong and you hook them together, what is that joining point? That's common point. It's something called trade finance. And the fact that we're focusing on that really plays to our tremendous comparative advantage in both these major streams. And I see that as one of Hong Kong's really greatest assets going forward. So on to my next question, which is a very popular topic, the central bank digital currencies, CBDC. Many of us are still trying to get a grip on, what is it, how do we use it, etc. I think, I really like you to maybe talk to our layman on the CBDC, where we are now, and how does that really solve the pain points for businesses like Juge again? How do they take advantage of CBDC?
Well, the way we look at CBDC, we actually started to look at it some 3-4 years ago, again, when we started this project with Bank of Thailand, because we are a little skeptical about some of the crypto currencies, but the technology behind it is highly attractive, which is distributed ledger technology or blockchain. We believe that blockchain holds great promises in solving some of the long-standing problems that we have, especially those involving multiple ledgers, multiple entities. and cross-border payment is one. So we started a few years ago this pilot project using central bank digital currency, basically digitized token issued by the central bank, very much like the banknotes that you have in your pocket, but it's just digitized tokens instead. Using central bank digital currencies issued by both us and Bank of Thailand for wholesale use, for cross-border payment use. I won't go into all the technical details, but the result is that through the pilot and now expanding to also UAE and also mainland China, the pilot results are promising in terms of, for example, if you've been through some of these payment process, actually it's quite painful. Sometimes it takes like 3 or 4 days. You don't even know where the payment is. You know, is it with correspondent bank A or B? Where does it go? When will it arrive? But the CBDC payment network corridor can actually cut down the payment time from 3 to 4 days to just seconds in a very accurate way. And the cost as well, for some of the payments involving especially currencies of emerging markets, sometimes the fees can go all the way to like 6 to 7% of your remittance amount. But when we use the CBDC platform, which actually includes a kind of ethics competitive bidding platform, that would reduce the fees and ethics costs to just like 3 to 4% at the moment. There could be scope to further cut that down. So when you think about people having quite substantial payment needs around the region, that efficiency and that reduction in cost is actually highly conducive for them to continue with the trade finance payment process. So we are hopeful that especially if we've got more central banks joining in, if we can really be successful in our pilot, got more central banks joining in, forming a real payment network across Asia or even beyond Asia, we really hold good hope that it can solve the long-standing problem of cross-border payment being lengthy and also expensive. It's actually one of the G20 objectives as well. We're not sure yet, but if you don't try, you'll never know. So now we're on good track. We hope that it will really succeed eventually.
Now, this is really great. You're really addressing one of the key pain points in trade facilitation, which is speed, accuracy, and also cost. We got to get the cost down, and we got to do it quickly. Okay, one final very quick question, maybe just a few words of answer. I was very intrigued. You used the word that digital trade finance is a team sport. We're all part of Team Hong Kong, let's say. What would you ask of us if you had one thing to ask?
Well, just embrace technology, try out the new platforms. Don't be worried about changing your habits. You will find that it will be rewarding, whether you're a bank, whether you're a data provider, or whether you are a customer, an SME. You will find something rewarding through embracing this process.
Very good. Thank you very much, Eddie Yu. Thank you very much for joining us today.
Thank you, Victor.
Thank you, Dr. Fung. Thank you, Mr. Yu. Now, we move on to the panel discussion. I'm very excited. You know, in the 1980s, working for my father's SME, I dabbled in a bit of trade finance, and this is not my father's trade finance, let me tell you. But anyway, in the interest of time, I'll note only the titles of the panelists. First, as mentioned, Alessio Botta of McKinsey & Company will give an overview of the findings of the report we've been talking about. He will then be joined by Natalie Blyth, Global Head of Commercial Banking Sustainability, and that's a newly minted title for her. Howard Lee, Deputy Chief Executive of the Hong Kong Monetary Authority, and Andrew Wilson, Global Policy Director of the International Chamber of Commerce. And to serve as moderator of this discussion, Pamela Ma, Executive Vice President, Knowledge and Applications at the Fung Group. So we're going to start with, I believe, Alessio. Botta will give an overview of the report. Over to you.
Thanks, Alejandro, and thanks everybody for inviting me. And thanks, Mr. Yu, for the final call to action to the industry. I could not agree more with the view on, let me say, let's try it and let's make it work and let's push the adoption. Indeed, that is exactly what we have tried to understand in our report. The report, first of all, you can find on all the websites of ICC, McKinsey, Fung Business Intelligence, and it's a report that starts from the observation of what are the challenges of the global trade finance market. Let me share some of the exhibits that you will find in the report itself, so that we can analyze the main insights. So first of all, let's look at the size of this global market. Trade finance can be defined in different ways. For the purpose of this report, we've looked only at the cross-border trade finance, so we've not included the domestic trade finance. So for instance, in many countries, invoice discounting is one instrument of doing trade finance for domestic purposes. Here we looked only at the cross-border. And if you look at the cross-border, I think especially for this group, there are a couple of very interesting insights. First of all, Asia Pacific represents more than half of the global trade finance volumes. And the other interesting element is that the very vast majority of these volumes, which amount globally to $5.2 trillion annually, are related to documentary business, which is letters of credit, guarantees, so basically unfunded instruments, while the funded instruments with actual liquidity represent only the minority, 15%. If you look at these in terms of growth, the good news is that the funded part has been steadily growing in the past years across all regions, especially the buyer-led finance, so what is called also supply chain finance, where a large buyer is involved in a financing program for the vendors, but still we're speaking about the minority of the flows. So as Mr. Fung was saying in his introduction, we have spoken to many people in the industry. But first of all, we've spoken to the treasurers and owners of SMEs and mid-caps around the world, especially in emerging and developing markets. And we've spoken with them for like 45-50 minutes with each of them, trying to understand exactly what are their pain points when dealing with the trade finance business. And here we've tried to represent 5 examples of profiles of these treasurers and owners of SMEs. And you see that their profiles and their challenges are quite different in a sense, because you range from very active entrepreneur that have maybe very high level of technology readiness, but they are struggling to access to financing markets, to situations of, let me say, more prudent business owners in medium-sized enterprises that are relatively low technology ready, but with a higher finance and market access. But when you listen to them and you validate these with subject matter experts in the market, there are 3 messages that come out loud and clear. So the first is that there are very common barriers in access to liquidity. This is due to the fact that often banks, for instance, find difficult to evaluate, to assess the creditworthiness of SMEs that want to access to trade finance for many reasons. Availability of data, the level of timeliness of this data, and the fact that the data might not be up to date, the fact that some banks might struggle with understanding some types of risk, like country risks. And so all of these, let me say, makes, despite the fact that the liquidity is often present in certain markets, makes difficult for SMEs to access to this liquidity. The second element, which is very common, is that there is a complex and labor-intensive process for each transaction, right? So, for instance, if you think about letters of credits, it's still very manual and very difficult for many SMEs to elaborate the process. And the problem here is that we're not talking about large corporates with large back offices or administrative staff. Here we're speaking about small, medium enterprises with small staffs, small treasuries that need to handle very intensive manual processes, which have, let me say, an impact on the day-to-day level. And the third element, which is a bit, let me say, lateral, but I think very important, is that especially in moments of crisis like the COVID pandemic, many SMEs find more difficult to access B2B markets, international B2B markets. And there is a very loud and clear ask from these companies to the banks and to the financial community to help them actually access the markets. So it's not only funding, but it's also supporting them in their market scouting and market relationships. Now, why is this happening? I think here is probably the biggest paradox of trade finance. Trade finance, as I think also someone was commenting in the Q&A box, trade finance is a market where actually there always has been quite good innovation, especially in the past 10, 15 years. We have some digital island, as they've been already defined, which are employing blockchain, which are employing artificial intelligence, which are employing APIs. The problem is that some of these islands have never really scaled up. The level of adoption has been quite low. And still, the vast majority of the market relies on manual processes, legacy technology, and very, let me say, old and established processes. Now, we have looked at potential solutions for this. And we have started with a vision. And, I mean, there could be different ways of envisioning how this could work in the future. We have embraced a vision that does not look as some new global platform, but rather a vision that builds on what is existing and tries to connect these digital islands. So if we look at how we would like to see trade finance business working in 10, 15 years from now, we see the island still existing, but not being, let me say, separated, being actually connected, so that market participants, the dots that you see in this picture, can easily connect to the different networks. Each network could provide different services, use different technologies, but speak a common language across them. And this common language should reside in what we have called the interoperability layer, which is a virtual construct, I will elaborate in a minute, that is, let me say, responsible for creating, maintaining, and updating the language. Now we will explain what is the language about. I will anticipate that language means business language and technology language, because we need both, let me say, to make this work. And we believe also that with this construct and with a common global business and technology language for trade finance, there could be the opportunity also to dramatically drive down the costs of transactions, as also Mr. Yu and Mr. Fung were discussing previously, by using global shared utilities. Because if there are, let me say, common data models that are understood by all the market participants, then there could be global utilities, for instance, that could perform a real-time credit assessment based on those data models. And this credit assessment could be used by multiple market participants. Or we could think about company identifiers, for instance, at global level that are shared at market level, and where you have utilities that manage the maintenance and the exchange of information around this company identifier, for instance, easing the KYC and onboarding of new players into this environment. Now, what is needed to achieve this? These are the building blocks that we have envisioned. First of all, starting from the bottom, we believe there is the need for what we call digital trade enablers. These are enablers that go beyond the pure financing part of trade finance. So they are helpful for trade as a whole, also, for instance, for the logistics part of the trade. And these are basically two in our vision. A globally recognized company identifier to solve, let me say, issues around understanding who you have on the other side of the transaction, and the standards for digital trade documents. I will not comment with technicalities, but these are two areas. You see them colored in gray, which means there are solutions which are ready to market and that have been already, let me say, adopted and seconded by some organizations. Let me comment, for instance, on globally recognized company identifiers, the global legal entity identifier, which has, let me say, the back of a number of organizations. The second block is trade finance interoperability foundations. This is the mix of the business and technology language that is missing for trade finance to be interoperable. And here we see three boxes. First of all, trade finance is a difficult business. When you speak about supply chain finance, for instance, different banks mean slightly different products. When you speak about invoice financing, it could have, let me say, different means in different countries, right? So the first thing is start from a product taxonomy, and that will give transparency in the market, and would be commonly recognized across the different market participants. Here there are some standards in the market that are existing that could be integrated to be, let me say, more robust and complete. The second element is uniform trade finance data models, right? So how do you represent uniquely a trade finance transaction with a proper set of data? How do you represent a trade finance counterparty with a proper set of data, which is always the same and shared by the market participants? This is missing. Some industries have got very high benefits from defining this. For instance, in capital markets, this is pretty standard. And we believe that this should be one of the very first building blocks of the target ecosystem. And then the third, standards for trade finance APIs. So a technology language of interconnecting the trade finance technology systems between the different digital islands, so that a market participant can access in the same way to different digital networks that are providing the same or even different services. This is also missing. We see some markets like Europe with PSD2, UK with the UK Open Banking Initiative that have highly benefit from adopting a market-wide API standard. This is missing in trade finance, and this should be global, not at domestic level. And then the last box is guiding principle for trade finance interoperability. So while the first two blocks, we see them as bit as almost mandatory to create the ecosystem that we've seen in the previous page, there could be also the role for the interoperability layer to define some guidelines and best practices that could be adopted by market participants. And here we see, let me say, three types of best practices. The first is blue books for trade finance processes and workflows. So how to optimize and make streamlined and cost-efficient trade finance processes using AI, omni-channel offering, and the like. The second is best practices for sustainable trade finance. Here is where also the ICC is doing some very relevant work, but we need, let me say, a more agreed understanding of, for instance, what do we mean by green trade finance and what are the financing practices behind this. And the third is we've spoken about shared utilities, global utilities. Of course, there couldn't be a mandate for global utilities, but there could be guidelines and best practices for setting this up and, let me say, advocating the market for creating this. Before closing, I would like, let me say, also to make a call for action. So we believe there is the need to establish this interoperability layer. It could be an organization, it could be a network of organizations, it could be an advisory group, but it must be something with the mission of doing three things. First of all, if we start from the bottom of the previous page, promote adoption at scale of the existing trade finance standards for operational interaction. So we said that global recognized company identifiers, standards for digital trade documents, trade finance product taxonomy are already there, can be fine-tuned, but really need to be adopted quickly by market participants, especially on the supply side. So banks and their technology providers, to enable the demand. As Mr. Fung said before, it's a game of adoption on both sides, but we believe there is a responsibility from the financial services market to drive this, especially on what is already existing. The second element of the mission of the interoperability layer would be to design and disseminate the additional trade finance standards and protocols to fill the market gaps. So what is colored here in black in the middle block? The standards for the APIs and the uniform trade finance data models. Someone has to take the responsibility for defining this globally, and this is a critical technology and business language missing piece for this ecosystem. And the third mission is playing a bit as a think tank, as we were saying, in defining the guiding principles, the best practices, the blue books that can be adopted by market participants if objectives number 1 and 2 are already achieved. These, of course, will have benefits for all the market participants. I will, for the sake of time, I will not comment, but you find all the details and all the elaborate in the report. Let me leave you with a comment around the timing, right? So we started this clock, let me say, in November, December of last year. So we believe that this year and the first 6-9 months of the next year will be critical to mobilize the existing trade finance ecosystem. And I think that events and discussions like these are critical to create the consensus and to mobilize the players. This includes also establishing the governance for the interoperability area. We believe that if this is done well, in the next 2-3 years after the first wave, the reconceived ecosystem could start to be developed and begin scaling up adoption. And then we believe that in additional 5 to 10 years, this could be a completely different ecosystem, which is important, is meant to stay for many decades. If we look at the technologies that are being used today in trade finance, some of these were established in the 70s, if not before. So this could be an ecosystem that stays for 4 or 5 decades. So it's, let me say, a mission of a generation of financial service executives to redefine this for the future. I hope, let me say, I've balanced the time with the details, and I leave it for the rest of the panelists and the Q&A. Happy to take any question, of course.
Thank you, Alessio. And really delighted to turn our attention to the panel today. My name is Pamela Marr, and I'm joined by a very expert group of panelists. I'd like to go back to the pain points. I mean, a number of times we've referred to the pain points faced by SMEs in accessing trade finance. And I'd like to first turn to Natalie. Can you remind us, what are these pain points, the major ones, and why have we as an industry been unable to address them, even though the technology has been around since the 1970s? And what are the strategies that we're using today? And you know, the more colorful and specific you can be, of course, it would be appreciated by everyone. Thank you. Go ahead, Natalie.
Thank you, Pamela. The barriers, as Eddie and Victor have already highlighted, and Alessio, are very well known about serving especially SMEs. And the industry has been working hard with those tech enablers. And I'll also touch on the ATF vision and how that could really accelerate this necessary process. But firstly, the barriers, they're very simple. I mean, the cost of onboarding. is the first one. The cost for banks to conduct know your customer and anti-money laundering due diligence is high. It's still high. It's about 50,000 per client. And it's duplicative because every bank has to do it. There is not yet the shared utility. The second barrier is not just getting them on board, but then when you have your client on board, what does that cost to serve? Trade finance still being very heavily paper-based, that creates additional complexity, inefficiency, and risk because it's manual and judgmental. And then finally, there's the heightened credit risk, which is known obviously from SMEs, which is reflected in their higher default rates. There's just not enough meaningful digital data yet to differentiate between good and bad risk propositions, nor risk mitigation tools readily available that can make them viable. So as Victor highlighted earlier, all of this combined really does result in that increased trade finance gap of around $1.7 trillion. And it hits those SMEs the hardest. So those are the sort of the barriers. You asked me, Pamela, to be specific about the actions. I can talk about the actions that the banks are taking today. And HSBC, as the #1 trade finance bank, we take that position very seriously. And we see ourselves as responsible, not just for our own business, but for the industry and all that we serve. In the last 2 or 3 years, addressing that cost of onboarding, HSBC is the first bank to automate KYC and the AML checks in trade finance. And we're also making use of third-party shared utility services such as SWIFT. We are actually seeing greater use of the digital identity tools that provide verifiable, transparent, and accessible data. That makes that customer due diligence easier and more efficient. On the cost to serve, we're taking advantage of increased digitization. Actually, that's had a real bonus through COVID because the e-penetration rates have gone up significantly. We're now at 84%. And digitization helps make that trade easier and more accessible. For example, trade as a service, providing finance at point of sale. Those APIs, Alessio, that you talked about, providing SMEs with that quicker, more transparent access. Just simple mobile trade trackers that help SMEs get instant information on the status of the trades. And then we've talked about blockchain, which is the distributed ledger technology, providing that single, verifiable, secure, immutable moment and source of truth, but that makes it faster, safer, and more efficient, getting velocity into that working capital and therefore trade. And on the credit risk, that digitization that Eddie was talking about, that digital data decisioning, that also provides data that will enable us to automate that credit decisioning using real-time transactional data, not some historical one-stop photo of a sort of a balance sheet and sort of accounts. And by its nature, it's actually more accurate. So that will actually zoom in on much more sort of accurate decisioning. And with the age of development, we've broken the mold for public-private partnerships. This is another way of sharing that and distributing that sort of risk, enabling us to go much deeper into supply chains. And again, COVID was an accelerator for that kind of thing because the pressure and the urgency around getting the PPE and the vaccines distributed really was an opportunity we clearly could not miss. And then if you sort of put on top of that what the ATF vision is, I really believe that this can accelerate the adoption at scale of, very similar to Alessio's comments, some of the following critical trade finance standards. So that globally recognized company identifier, that will reduce the cost of onboarding and enable the setup of global shared utilities. The standards for the digital trade documents, that will result in a more rapid shift to the paperless trade, reducing that cost to serve. And then the trade finance product taxonomy and data models, and that will increase that transparency, enable that interoperability across multiple channels and platforms. And critically, it'll help trade finance be created as an asset class where we can get much greater distribution. And that again will also increase the sort of the trade finance supply and velocity. So that's my answer to your question, Pamela. There's lots to be done, but we're on the journey. And Hong Kong, with their sort of initiatives, brings all this together, actually, and we're absolutely thrilled to be part of those proof of concepts.
Okay, thank you, Natalie. It's a great reference to Hong Kong because I'd like to ask Howard, based on your experience dealing with SMEs in Hong Kong, Can you add to or reflect on what Natalie has said, particularly given that you supervise all the banks, and some will always go first, some will always digitize sooner, some will always have more outreach. How do you deal with the fact that there is so much disparity in the market? And is there a role for the regulator or for policy in enabling a faster pace of change?
Thank you very much. I think this is a very important question. Very often, it's not just the technology, but it's the processes and then the changes that need to be made in order to adopt these technologies. Just like many of you, maybe you have had the experience of introducing system changes in your company, bringing in a new piece of application. While the application could be well tested, very good, well, sort of a standard application, but when you need to introduce that into your organization, you need to change a lot of processes. A lot of people will need to do things differently in order to adopt the application. That's the most difficult part, just like what a lot of us are doing in terms of digitalization. So the key word is how to really mobilize everybody in the ecosystem to make the jump and to make the leap in order to adopt and embrace this kind of technology. And as alluded to earlier, we need to have both a push and pull effort in this. In terms of a pull, obviously, we would need to enable everyone, every participant, to see the benefit, to see the value in this. Now, we cannot have this all at the same time. We need to have a general education, but we need to have some early wins, some low-hanging fruits to prove to the world and the participants that if you are taking a leap, probably you would reap the same kind of benefit as well, such that there's very tangible benefit for them to see. This is very important. And we also need to have some kind of push as well, where we have a handle. I'm using the CDI that we are doing as an example. You mentioned we are a bank regulator, we regulate all banks in Hong Kong. So we see this as a tremendously beneficial public good. That's why we actually wrote to all banks. And I would fall short of the word of require them, but strongly encourage them to make connection to CDI, to make use of the CDI for their business, and then try to gather information, gather data. And one important thing is also, as you will see, there could be cases where there would be bilateral arrangement between a bank and a data provider, which is pretty simple. But you can imagine if different banks do this bilaterally, and then we will again end up in sort of a different data island. It would be most beneficial to the ecosystem as a whole that everyone come on board instead of going through a lot of exclusive bilateral connection, but everybody connect to everyone. And then we can, not competing on a very low level that depending on how much data provider you can sign up to, but on a much higher level that we all can have access to a vast amount of data, and then you compete on your ability to make the most out of this data lake. So this is something that we are pushing as regulators. So going back, process changes, low-hanging fruit, and then sort of use some push where necessary.
Okay, thank you, Howard. Andrew, turning to you, you've actually looked at this issue for a number of years, and I probably since the launch of the ICC Trade Register. Can you shed light on what are the things going on at the global policy level which can help provide support to catalyze the change that we're seeking? And where do you see those happening, particularly in the next year, at the G20 level, APEC level, ASEAN, all of the above? Because it's essentially where should we be throwing our support in terms of policy?
Thank you, Pamela. Great question. So I think that there's been if you like, no shortage of policy interventions to support the trade finance market, certainly since the global financial crisis. We've seen many efforts to backstop the trade finance market through regional and multilateral development banks, all of which are incredibly positive. We've seen the emergence of standards like the Global Legal Identifier standard endorsed by the G20 maybe almost a decade ago. But I think what we essentially need is a concerted understanding amongst policymakers, particularly at the G20 level, that trade and trade finance are particularly vital coming out of this crisis. We saw yesterday the International Monetary Fund downgrading the outlook for global growth quite significantly, particularly in developing regions. We know from data within our network that the outlook for SMEs is particularly bleak in many developing economies. We frequently see survey results showing that between 30 and 40% of small businesses think they'll be out of business within 6 months without adequate support. So I think it's important that particularly the G20 and other international institutions recognize that trade and by extension trade finance will be very much a vital source of stimulus coming out of this crisis. It's important at the macro level for restoring global growth. It's also very, very important at the firm level in terms of just maintaining the viability of small businesses as stimulus fades from the economy. And I think what we don't need necessarily is a patchwork of sporadic interventions, but a consistent vision from the international community. And I think what the report from the ATF very clearly sends is the need for that integrated, cohesive agenda that we can all get behind, both from the public sector, but also the private sector.
Okay, and just taking that one step further to talk about what does interoperation actually look like? How do you see that happening? You know, that we're going to let all these solutions and all these pilots and platforms basically develop because they're market responses to existing problems, and at the same time ensure that there's that interconnection taking place. What would you like to see? On a global level, and you know, also feel free to let us know how this is going at the Digital Standards Initiative in Singapore, if that's relevant.
It most certainly is, and I think our experience over the past 18 months through the Digital Standards Initiative has shown, to crudely paraphrase Chairman Mao, that 100 or hundreds of flowers have bloomed in the digital space, but the net effect has been for digitized trade to wither on the vine. And I think we need to get very, very serious in addressing the proliferation of digital islands. Yes, innovation, new platforms, new solutions are all good things, but they need to be developed in a way that is internationally consistent. And I think, as Eddie said earlier, interoperability is very much the key to that. So essentially what we're trying to do through the Digital Standards Initiative is to look at how do we bring some degree of convergence using ICC's convening power of all these different new initiatives and also the public and private sectors, and force convergence or force that interoperability layer in terms of data models, in terms of standards for documents, in terms of APIs. And I think that is very much what is needed and what is missing. And I think what we've seen from the DSI's work over the past 18 months is it is increasingly bringing together companies across the supply chain. And I think that is really the key point and our key message in many respects, that the solutions to digitizing trade and addressing the trade finance gap can't be addressed in isolation. It's not necessarily something the banks can address alone. It's not something logistics firms or commodities firms can address alone. We need consistency across the value chain and across countries, recognizing the interconnectedness of the global economy and the intrinsic interconnectedness of international trade.
Okay, thank you. Howard, I see you nodding. What is the role to be played by Hong Kong in enabling this interoperability all along the supply chain? And that's noting that once everything's digital, it could actually be anywhere. So what's going to be the role of Hong Kong in this?
Hong Kong, our role has always been a great intermediary. especially now, given that we are an international financial center, we have most of the major banks operating around the world, having a presence in Hong Kong. And also we are at the doorway of mainland China, which is, of course, the biggest trading nation in the world. And a lot of the operations, like intermediary offices or companies, are situated in Hong Kong. So I see we are in a pretty good position to help digitalize this pretty difficult part of the financial system. And that's what we have been doing through the different initiatives that Eddie described earlier, the E-Trade Connect, the CDI, and also the Enbridge CBDC project. Now, the important point is Hong Kong is also a very important pilot ground for a lot of initiatives involving the mainland, like as we have been doing in terms of Stock Connect, Bond Connect, in the sense that some of these issues might involve cross-border issue, capital account control, flow of data. These could be pretty tricky issues, but we hope to play a role in the sense that we can build the connection between the suppliers in the GBA and also the buyers around the world, using Hong Kong as a hub and then in a control environment, in the sense that we can provide a model for the flow of information, the flow of money between the mainland and other parts of the world. I think that would be a great benefit that we can create for everybody in the ecosystem. So this is the direction we are heading through the different projects that Eddie has talked about. So I hope that we would also work in collaboration with the AGI and with your project. We are very happy to work more closely as to the adoption of the different taxonomy and also the different standard, how we can start to be the one who can provide a little bit of early win by adopting this kind of interoperability. And it's important that we together try to create a kind of a champion to have early adoption, and then through this champion gradually extend to their connection, their network. I think that's very important, and we will be looking forward to working together with you on this.
Okay, thank you, Howard. Alessio, we during the research, this issue also came up. You know, what does the interoperability layer look like? Is it a confederation? Is it an organization like the WTO? Anything to add on what would be your kind of suggestion for this panel on how do we all work together to make the interoperability layer kind of a reality?
So first of all, let me start from what this construct should not be. This will not be yet another technology platform or digital island, right? Should be a kind of convening entity that helps the existing networks and the market participants to connect each other by defining and proposing the rules, as I called before, the business and the technology language for the interconnection, right? So this, of course, could be an existing organization or a network of organization. I think that, to be honest, because there are some standards which are already there. We spoke about the global legal entity identifier. I see, let me say, this as a network probably of organizations or groups, but there must be some type of coordination. What I think is important is really that the business and the financial services community work together also with regulators and multinational organizations to create, let me say, this entity that has the three objectives that we described before, right? And the fact that some of these standards are already there and just need, let me say, fine-tuning and push for adoption. But also the fact that, as we heard from Natalie, for instance, some, let me say, leaders in financial sectors are already experimenting with some of these technologies is very encouraging in the direction of creating the interoperability layer.
Okay, thank you, Alessio. Let's turn to talk about one of Asia's great challenges, which is sustainability and the net zero challenge. It's been broadly talked about that SMEs are the key to Asia achieving net zero. Natalie, can you help us understand what's the link between solving the trade finance gap and net zero and sustainability as you are seeing it from the bank's perspective?
Yeah, Pamela, I think this is going to be a new sort of front in the battle to support SMEs, actually. I mean, when you consider global supply chains account for as much as 80% of the world's total sort of carbon footprint and emissions, and then in turn within that, SMEs will commonly make up about 90% of any single supply chain. Victor was talking earlier when we were in our sort of green room, virtual green room, about his own supply chain. So they're really critical. So supporting them is going to be an absolute necessary enabler to get that net zero. We've recently done some research called Delivering Net Zero Supply Chains with Alessio, sorry, it was with BCG, not McKinsey. And that research revealed that there's going to be 100 trillion of investment needed. And up to about half of that is going to need to be directed to the SMEs. So if you compound that with the existing difficulties of getting trade finance to the SMEs, we've got a serious problem on our hands. And it's going to add a lot of complexity to those net zero challenges. It's harder to direct the funding to the SMEs. They've got much more limited resources and expertise, and they have lack of sort of knowledge and know-how and resources at the moment. So it is this new front. There are three areas, I think, that where we really need to sort of focus to support the SMEs make the transition. One of that is making the sort of the new climate technologies accessible and scalable to SMEs as soon as possible. That critical access to funding, where obviously banks have got to play a role. And then really there's a role to be played here in terms of sort of knowledge and collaboration, which is effectively a big culture shift. On the technologies, we've got to ensure that innovation and research and development is made available. In terms of financing, that's going to be, if we look at it end-to-end supply chains, we can then collaborate and co-create that full spectrum. So if you take supply chain program, the big end of the scale have got vested interest in going into not just tier 1, 2, but deep tier financing in transitioning those SMEs, including access to sort of working capital and term finance. Transparency in data models and standards also will help bring public-private partnerships together that we talked about earlier, which again will sort of support the SMEs with greater access. And then that need to sort of change culture and foster a sort of an ecosystem that promotes collaboration, because no one individual team organization is going to be able to solve this on their own. It's unprecedented, a bit like sort of the pandemic environment required collaboration. That will be a dry run and a rehearsal for what the climate change is going to challenge us with. And when you look across industries, we looked at automotive and textiles, 40 to 50% of that value is in the sort of the big player end. So they've got a vested interest to sort of incentivize and collaborate with their suppliers. But SMEs are already struggling. They don't know what the measure of success is. There's no standard. There's going to be reporting requirements. Again, everybody's sort of setting their own. So we've got to pull this together and standardize these measurements and reporting standards to bring some consistency together, enable simplified data collection, and really to leverage some of these new technologies that exist, such as blockchain and the Internet of Things, to implement and monitor really targeted action as each business has to transition.
Okay, thank you, Natalie. If I'm going to take the moderator's prerogative, I would also add that it's not just the net zero challenge, but also SMEs as the road or as the route to solving Asia's inequality and job creation issues, especially noting that there are reports that as a result of the pandemic, 75 to 80 million additional people have gone under the poverty line. So we have a huge task, and we can't do it without the SMEs. Andrew, the trade finance gap challenge is now dovetailing with the challenge of running sustainable supply chains. And you've recently launched a new initiative on defining and setting a taxonomy for sustainable trade finance. Can you tell us what will be the role of this kind of taxonomy or framework in contributing to solving the trade finance gap for SMEs and also for financial institutions?
Thank you, Pamela. Really just to pick up on something Natalie said, and we completely agree with the analysis on the challenge of tackling scope 3 emissions or supply chain emissions. But essentially the way we see this in economic terms is, for many years, the world, particularly in the UN climate process, has talked about the Nicholas Stern or the Lord Stern doctrine of the economics of climate change, which says taking early climate action results in positive economic outcomes for everyone. And I think that's true at the macro level. But I think once you get down to the perspective of an SME at the micro level, you see actually the real challenge at hand is that taking climate action involves potentially short-term costs and potentially significant investments. And the surveys we've done through our network, engaging local chambers, have shown very clearly that SMEs need positive incentives, whether through supply chains or through their financial institutions, to actually start taking action. So it's not a question of SMEs not being aware of the challenge. Yes, they lack technical skills. Many of the SMEs we've spoken to actually do want to do more, but there needs to be an immediate commercial return. And I think that's been one of the sort of key drivers behind our work in the field of sustainable trade finance. How do we actually define what constitutes sustainable trade and sustainable trade finance in a way that can start to reward those SMEs who are adhering to high social or environmental standards? I think there's a real prize there, and the way we see this is there's an opportunity, if we get the framework right, to align what is at the very least a $5 trillion US dollar market with the UN's Sustainable Development Goals. It's very, very challenging to do so, but I think there's also an imperative for the market to get behind this. And I think one of the challenges we have is we've now seen, just as in the digitalization space, many individual institutions or fintechs or service providers, each defining sustainable trade in their own way. And I think that leaves the market very, very open to challenges around greenwashing. So I think if we want to provide those incentives with genuine integrity, we need the market to align behind common, robust definitions. And we very much hope that the process that we're leading, hopefully to completion at the end of this year, will help us get there.
Okay, thank you, Andrew. Howard, would you like to add anything to this? What is the role of your fintech platforms in enabling and catalyzing the drive to sustainable supply chains, or even just a sustainable GBA?
Yeah, I think in terms of technology, I think it holds pretty good prospect in helping to really track the ESG performance or a lot of things, in the sense that very often when we talk about greenwashing, whether talk about sort of reporting, authentication, is pretty difficult, especially if you talk about sort of SME, and then it would be very difficult for, no matter whether you're a lender, bond buyer, bond investor, to really understand whether your money really put into a gainful and then the good green uses and conforming to US ESG standard. This is one thing that we are trying to work with the BIS actually on a project like green bond issuance, whether we can make use of technology as some kind of reporting and tracking of the green performance of a project, and then for checking by investors. Increasing transparency, I believe, would enhance investors' confidence, and then would attract more sort of flows of capital into this, and then in return, that would create a more virtuous cycle that would help financing by SME and any corporate indeed, such that the kind of net zero effort would be better funded. This is something that I hope either through our effort or through other sort of digital platform, making use of DLT technology, we can give a better push for this kind of new technology in terms of measurement and metrics.
Okay, thank you, Howard. Alessio, anything to add? Where do you really see the opportunities to kind of navigate the terrain of sustainability and trade finance for SMEs?
I think what we have, let me say, not covered so far is the fact that a reconceived ecosystem for trade finance would open up also the liquidity market, right? And to institutional investors, for instance. So there was a question in the beginning of the panel about, let me say, how can third parties enter into this world, this trade finance market, if it's basically a bilateral market, right? And but if we push this level of innovation with common and agreed business and technology language, data models which are common, APIs and the like, it will be easier for market participants, not only on the demand side, but also on the supply side to join. So for instance, I'm thinking about export credit agencies that could more easily partner up with banks in providing export finance instruments. I'm thinking about institutional investors that will be willing to finance part of trade finance as an asset, let me say, making trade finance an investable asset, accessing to this market. And of course, especially when you start looking at institutional investors, sustainability and sustainability rating will be more and more important, right? And a large part of the investment and the liquidity will be driven by the level of the sustainability of the specific transaction and of, let me say, the counterparts, right? So I believe that to foster these, let me say, broadened ecosystem on the supply side with more financial participants, it will be critical also to embed the sustainability element in it, not just because it's important for the planet, but also because the institutional investors are increasingly looking at this.
Okay, thank you, Alessio. So actually what you're saying is that we're trying to so-called drive inclusivity on the borrower side with SMEs, and we're also trying to use interoperability to drive inclusivity from the investor side as well. Okay, thank you. Let's get really practical, and let's talk about what we want to see in 2022. Because to have a vision is one thing, to actually, do something about it is an entirely different affair. So let's just go around and tell us what you would like to see happen with regard to progress toward the interoperability vision in 2022, and who you think the key stakeholders are to, so that we know who do we need to get on board, and what will be their remit. Think about the resources and stakeholders. And so, who would like to start? Maybe Natalie, go ahead.
Pamela, thank you. So if you're inviting me to start about the stakeholders, why don't I start high level then? And given who we are in trade finance, we really do take that leadership responsibility very seriously. So we actually engage a lot with the global sort of policy forums, such as the B20, the WTO, etc., promoting, exchanging ideas and making recommendations. The three I would sort of zoom in on, and they're all encompassed in the ATF vision, the ones that I think would make the biggest difference, I mean, they're quite basic, but I think they're really required, is the UNESCO trade framework, the legal identifiers, entity identifiers that we've talked about, and then the greater public-private partnerships for a whole host of reasons. UNESCO, that's the UN framework that governments can easily adopt, that digitizes trade across multiple dimensions, including bills of lading, customs documents. All of that helps reduce that paperwork and that complexity and that sort of manual judgmental sort of risk. So far, it's only been adopted by 5 countries that have ratified this framework, although it is important to note that China is one of the early adopters. If we could just get widespread adoption of that one, it would really help standardize and digitize trade. So that's the first one. The second one is really perhaps enforcing and extending the scope of those legal entity identifiers to SMEs. We've discussed the benefits of it around KYC, AML, the digital credit decisioning. Currently, adoption is pretty patchy at a corporate level, but you could get government action to formalize its use. And if we could get that, that would be another big sort of step change. And then thirdly, that greater use of public-private partnerships. Given the higher default risks associated with the sort of SMEs, you can have limited appetite for that financing, and hence it sort of compounds into that trade finance gap. If we just get more involved with the multilateral banks and sort of share that sort of risk, you can get more financing into the system than would otherwise be possible. We've proven it. There's a sort of, we broke the mold. We've got a template there that became lifted and shifted when we did the work with the Asia Development Bank supporting the PPE and the vaccines during COVID across supply chains. So it's a model. We need to set a new standard, and then we can just sort of widely replicate that. So those would be my 3. Thanks, Pamela.
Okay, thank you, Natalie. That sounds like a really good start. Howard, over to you.
Okay, thank you very much. Natalie has just given a very good overview, broad macro level of the key tasks involved. Maybe I try to approach it from the other end of the equation. In the sense that while we have put in place all these framework, taxonomy, and everything, I go back to what I described as we need to prove to the participants that there's something in it for everyone. And perhaps other than the structure and the system in place, it's important to get a few key players in each particular sort of node, so to speak. Like a bank like HSBC is a big player there, and some big connector to suppliers and buyers, such that we don't need to be very ambitious on day one in the sense that we're going to roll the standard out to the whole industry all at one go. But try to bring a few key players, some anchor players there, and get them on board, and then try to provide a sort of a work through end-to-end solution that we can create, and then let people see how this would work. And then through this anchor player, this is technology champion, gradually extend it to their connection, either by sort of encouragement, persuasion, or coercion, whatever you name it. And then we take it from there. And as a regulator here, as a platform builder in Hong Kong, we are building a few platforms. At the end I described. We are very happy to try to adopt as much as possible in our platform, but still we need to find ways to kind of persuade the users on the platform to adopt the new standard, the new arrangement. So I believe this is something that we really need to work together to find some influential anchor users for these new ideas in order to prove it and then to disseminate the usefulness of the system or the arrangements to the wider community.
Okay, thank you, Howard. That's so practical, and it almost seems very doable too. So, Alessio, what would you like to see in 2022 towards the interoperability vision?
First of all, I agree with everything that has been said by Natalie and Howard. And again, it's very encouraging to see the level of consensus and the sharpness with which, let me say, the market is receiving this. What I would like to see on top of these ideas is one more thing, very practical. I would like to see a common announcement by 10, 15 of the leading banks in trade finance, global, regional, and domestic, about the fact that they're joining forces to define the business and the technology language, so the data model standards and the API standards, together with the interoperability layer, whatever it will be, let me say, and to adopt these standards to make trade finance a more interconnected, interoperable, and inclusive market. And I think, I mean, there are some inspirations to this. For instance, what has been happening in Europe with PSD2, where banks have spontaneously joined forces together to define the technical elements of PSD2, could be one example of how this collaboration could work.
Thank you, Alessio. That sounds like a work plan for your banking practice, actually. So, Andrew.
Thanks, Pamela. Well, I think I can make one of Alessio's wishes come true immediately by saying that through the DSI, we will be pursuing a work stream this year, which hopefully will come to fruition within the balance of the year, to define that critical data model for trade and trade finance. So I hope that's good news, Alessio, and I hope you'll continue to be supportive of that work. I think just to put this more broadly, I think Eddie spoke earlier about the need for a sort of team Hong Kong mentality. I almost wonder if what we really need in this ecosystem is sort of a mentality of team global digital trade, which perhaps isn't so snappy, but what I think we would like to see is real convergence, both within industry, the financial sector, and governments, behind common standards, and a drive to define those where they don't exist, but also to utilize them. So for instance, take legal identities, which we've spoken about frequently. There are only 1.9 million companies in the world that have a Blyth-aligned legal identity. That is a pretty poor return on 10 years of effort. So how, through partnership across industry and with government, can we actually start to accelerate some of those trends? The other thing I think is very, very simple, and it's something for governments, but I think industry has a key role to play in making the business case, is adoption of the UN model law on electronic transferable records. So essentially giving proper legal recognition to e-bills of lading, for instance. Only 8 countries have adopted that globally to date. The G7 has made a commitment to adopt legislative reforms in line with the model law, but I think we need to see much more momentum there. And if you give proper legal recognition to digital documents, you increase confidence in e-trade solutions, you reduce the risk of legal disputes about who holds title to a particular shipment, and you ultimately build confidence and usage of digital solutions and digital trade processes. So we think that is really fundamental. And if we could go from 8 countries at the start of this year to 80 at the end, I think we'd be on that S-curve that Dr. Fung talked about earlier.
Okay, no small order. Okay, so we've come to the end of the panel. I'd just like to thank Alessio, Natalie, Andrew, and Howard for enlightening us on the concept of interoperation as the key to solving the SME trade finance gap, and then also for pointing out that this is an entirely doable task. We have the established trade, paperless trade treaties. We have a model for legalizing, paperless cross-border trade. We have financial institutions who are on board with the vision and already starting to implement it. And we have a very supportive policy and regulator in Hong Kong who is working to create that end-to-end, as Howard, you said, end-to-end example of how it can work and what will be the benefits for all the parties involved. So on a high note of collaboration and cross-sectoral working together, I'd like to conclude the panel and turn it over to John Denton to talk to us about the future of trade. Over to you, John.
Thanks very much, Pamela, and it's great to be here. In fact, I'm particularly energized, which is always risky, I think my team would say, by the discussion I've actually heard so far and the opportunity to participate. If you think about it, one reason we're so excited about this whole project around trade finance is when you actually consider what it is the ICC, which is the world's largest business organization. The reality, of course, these days is more than 2/3 of the ICC's constituency is actually based in developing and emerging economies. And whilst we feel the trade finance crunch hard in a lot of developed economies, we see it live in developing and emerging economies. And I'm actually in LATAM in about 10 days' time discussing this very issue. Because what we do is we seek to grow the global economy. We seek to advance trade and revitalize trade and advance sustainability, all the elements we've been talking about today, which is actually why we care about trade finance so much. So at the outset, I'd like to express particular thanks to the Asia Global Institute for their partnership in hosting today's event. I think it's very exciting that we can actually work together. I look forward to other opportunities to participate. And of course, we're blessed with the energy and excitement of Dr. Victor Fung introductory comments. It's always great to have Victor. Victor has been a stalwart, but more importantly, a driving force of the ICC. And as the current Secretary General, in many respects, it's Victor's prodding that keeps pushing me along. So I really thank you for that, Victor, and your participation. And Eddie, we haven't met before, but I've had the pleasure of dealing with a number of monetary authority guys around the world. I look forward to the opportunity to engaging with you because I really appreciate the way the Hong Kong authority is seeking to do not just the regulatory side, but actually innovate and create platforms. It's very important that you do so. So it's actually really important that this discussion goes on. And also the panel that's just spoken was a bit of a masterclass, I think, on framing up trade finance and what we need to do, and particularly the report that we've had from which we worked on with McKinsey. Just in the little bit of time I've actually got, in a way, I want to reiterate some of the themes that have been bouncing around. One is just on the broader economic context. I won't take long on that. But the issue of digitalization and the importance and relevance of that Natalie's, I think, quite brilliantly intervened on before. And that third piece, and I want to talk a little bit about this, about sustainability, about getting that right, because there's risks if we don't. And I don't want to spend a lot of time on risks, but I think we should just dwell on them a little bit. And I think just looking at the economic context, I think we all know that trade will be a vital source of relief for many small businesses whose balance sheets have been severely impaired by the pandemic. But as relatively recent history shows us, we can't take the supply of cost-effective trade finance to fuel the SME recovery for granted. That's why it's really important that we've engaged in this process and the advocacy from the group we put together with the ICC, led by Victor and Marcus. We know that today's trade finance ecosystem is actually remarkably sensitive to economic shocks, and there's no predicting how it will respond to some of the long tail risks that the pandemic has created. And I think we all know we're not out of this pandemic yet. I don't know those of you who sit in Hong Kong, you know that, you feel that. I was just in Singapore, and despite the best endeavors of the government there, there are still significant implications of living with COVID and trying to manage it. But as Andrew said in one of his comments before, when you look at what the IMF has said about the risks at the moment, the downward pressure on opportunities for the global economy, we also look at what the World Bank is talking about with the growing risk of disorderly sovereign defaults in emerging markets. And we add to that the risk of credit conditions tightening as central banks drive up base rates to curb inflationary pressures. So these are negative aspects, negative sort of cross currents that will actually affect the provision of trade finance and its availability and its pricing. So it's really important that we set the foundations for a strong and inclusive post-pandemic recovery. Understanding it's got to include the strengthening of the ecosystem for trade finance, because as some of the numbers already revealed today, the importance of the real economy, the importance of SMEs, and the critical nature of trade finance to fund those SMEs and support them is here. So our view, and the reason we're so keen to be involved in this process and lead this process, is that We don't think waiting and hoping for the best is an option. We don't think it's a good strategy. We actually think we need to step up and push along. I want to talk a little bit about digitalization. And I think this is one of the issues that troubles us greatly. It's the risk of slip back. And I think Natalie talked about this a little bit, and I think Victor, in your comments as well. What we saw during the course of the pandemic, particularly its most critical phases, and as I said, we're not through this yet, was the amazing number of advances we saw on the front of actually access and utilization of digitization, but we can't take that for granted. Because we've actually seen through this that trade's reliance on paper-based processes is one of its biggest sources of fragility. And Natalie said that, actually, if you think about it, the risk that leads to human-based error, etc., because of the dominance of paper there, which is one reason we push so hard on digitization of trade to try and ease this. But we love the fact, and this is something we encouraged and we enable it where we could, working with WCO, working with WTO, working with businesses, working with regional bodies. The fact that businesses and governments took such remarkable steps through the early days of the pandemic to digitalize processes, to keep trade flowing at a time when many so-called experts said the global commerce would likely grind to a halt. But it's vital that we don't lose those gains. And we've already seen some customs agencies, for example, removing some of the emergency trade facilitation measures which enable that. From advanced electronic information systems to paperless trade processes, we don't want to lose that. We actually had that through those emergency measures, and we're arguing now to keep that going. We don't want to go back to the old analog ways of doing business, because that is actually not going to take us forward. So let's move forward on that. And I believe it's really incumbent on all of us to ensure a concerted effort to drive forward on digitalization. And that's actually, I think, the wish list or the Christmas, what we want for Christmas to announce it at the end of December 2022. And I think that will meet the desires of many around here. So let's get those numbers up. Let's get the focus on the inter-trial processes and what's happening with UNSCAP as well. And yesterday I spent some time with the new Director General, Rebecca Grisman at the UNSCAP. Rebecca's great because she actually wants to work with the private sector. And so we're now putting together a pathway which we'll agree about how we all work together, because what we've said before in this discussion is we need to get some of these frameworks, which are great, actually adopted. And as with UNCITRAL, that's why we're working so closely with UNCITRAL through our processes to do the same thing. Look, I did mention this issue of sustainability, and I want to put it in a slightly different context than we've talked about today. I think it's fair to say that there is little prospect of the groundswell of investor and civil society pressure around sustainable finance receding in the years ahead. I think we're going to see more pressure on that. And it's a trend, and this I think really goes to the heart of why it's really critical around trade finance, that it's a trend from which trade financing cannot expect to be immune. We know firsthand from our own work in this field, this is what the ICC does hand to hand and on the ground, that defining sustainability criteria and metrics for trade is a lot more difficult than for other asset classes, such as for corporate bonds. But the observation we made, which is why we got involved, was that inaction risks leaving trade open to stinging critiques about its negative impact on people on the planet. What we don't want is a rehash of the 1990s anti-globalization movement in many respects, perhaps, but with potentially much greater political potency in the current climate, if trade finance is not aligned with sustainability. And as Andrew said, I think everyone accepts the macros about why all this is good, and we certainly do. But the lesson we did not learn, and frankly, the classic, the Davos crowd continues to fail to understand, is that talking about things continually at the macro without understanding the micro implications means that good little people get hurt and they don't want to play the game. So that's why it's so important for us to focus on the micro issues about how do we incentivize? How do we help? How do we create the capability? I mean, the ICC, we've actually created tools, digital tools to enable that, to help banks actually live up to their net zero commitments, but importantly, do it in a way that doesn't hurt SMEs, but actually helps SMEs who want to get involved. So we accept the macros. What we actually want to do is deliver on the ground, and that's a micro discussion. That's really where the groupings around this discussion today is so important. the players from the banks, the players from government, the players from regional development banks, etc., critical. But ultimately, chambers of commerce and people who have direct access to SMEs, and actually providing tools which can be readily usable, which is why we've created, we call it ICC SME 360X, by the way, if you want to Google it and have a look at the website. But that's got to happen. We cannot allow this debate to be hijacked and turned into a debate akin to the anti-globalization movement. It'll have very negative consequences, I think, for all of our constituencies. But while I pointed to risk factors, I don't want to finish on a downbeat, I want to finish on an upbeat. Because I think what we heard today and what we see with the report is that we have within our reach an ecosystem that can finally deliver on the promise of digital technologies to fully democratize trade, a term that's used a lot, but actually, again, what we're doing is coming up with how you actually get that done. And I firmly believe that we can capitalize on the potential environmental, social, and economic gains that this will bring. But the key word, and it's one that Dr. Victor Fung said up front, and I keep on pushing, it's action. I think we're all saying that as well. We actually want to have measurable outcomes on this. Is why we need to keep pushing forward, because our biggest enemy here is actually inertia, which is actually the biggest enemy of global progress. It's the inertia that holds back the way the global international institutions have actually failed to adapt themselves to the context in which we operate. It's just inertia. Life is too easy as it is, even though it's not working properly, it's kind of comfortable. We don't believe that's right, because it's that kind of attitude that will stop us moving forward on trade finance. So action is really important for us. And that's why to actually galvanize action, you've got to have a compelling vision. And I think when you have an opportunity to look at the report, but actually have your opportunity to think about the consequences of us achieving this vision, the democratization of access to trade finance, the way in which it will spur economic growth, help communities build prospects and opportunities for people in communities, and actually bridge a number of these gaps. This is a compelling vision, a reason to get on board, a reason to be motivated to act. And it will require action from all of us, from large corporates, regional development banks, smallest of micro enterprises, from financial institutions to public institutions. But as Andrew says, maybe we'll just have to get a sexier title for this team trade finance, but that's not a bad one. The team trade finance to deliver is really what we want to do. So I'm deeply committed to ensuring that the ICC is at the forefront of this charge. It's like, it's why we're here. It's what we do. We grow the economy, we revitalize trade, we advance sustainability. And I think what we've already seen since the publication of the ATF report last November, that we've already started to accelerate our work under our digital standards initiative that Andrew talked about, defining common data models and APIs for trade financing. We're also working to enable industry convergence across value chains around standardized digital documents. We've published the first beta framework that Andrew talked about before in terms of helping banks and corporates gauge sustainable profile of their trade transactions. And we'll shortly be launching, and I'll be in Ecuador in about 10 days' time, to launch an innovative new trade finance platform in Ecuador and then in Mexico as part of our Trade Now program. You know, we do global policy, we do policy influence, we do standards, but we do stuff on the ground, particularly when there's market failures or the market needs to be pushed, and we will get involved at that level as well. It's the power and the beauty of the ICC, I suppose. And we recognize that one of the opportunities here is to connect you all up with what we're doing. I'm really glad that we have so many people from Thailand participating in this. Thailand is playing a very important role this year as chair of APEC. I'm very proud that the chair of the in Thailand is chairing the APEC Business Advisory Council. I intended to be in Bangkok a couple of weeks ago, but navigating COVID restrictions is tricky. But my aim is to be there at the end of March in April, and I hope to see a number of my friends in Bangkok at that time, but to talk more about this. Because as we said before, the critical pathway here is G20 engagement. I've just become the co-chair of finance and infrastructure in the G20, B20 process. We'll be pushing that there. We're pushing this at the G7. We're pushing this then at APEC. We're pushing this in the Latin American regional groups. We're pushing this in Africa. We're pushing this in the Middle East. Our aim is to deliver those Christmas gifts under the Christmas tree that we want, which is real advance. So thank you very much. And I hope you will see us as your trusted partner as we move forward. We have the power to actually bring everyone together, and we will use that power. Thank you.
Thank you very much, Mr. Denton. This concludes this online conference on trade finance. If I might just note that we were connecting people from Milan, Paris, both sides of the harbor of Hong Kong, which is a big feat these days. You might notice that a lot of our speakers and panelists had art behind them. I do too. And I think this suggests subliminally that we should be thinking very creatively and innovatively about trade finance going forward. So thank you very much to all our speakers and to the organizations involved, particularly our co-organizer, the ICC. A video of this event will be available in very short order. And please, speaking for the Asia Global Institute, please follow us on LinkedIn, Facebook, Twitter, YouTube. And finally, best wishes for the year of